Let's get right into it. Prop trading firms promise you a shortcut to trading success. Prove your skills, trade their capital, and live the dream. The marketing is slick, testimonials are glowing, and the rewards seem limitless. But here's the truth. The vast majority of traders who pay for these challenges will fail. Over 90%, sometimes closer to 95%. Most never touch a dollar of the firm's capital. This isn't just because trading is hard. The system is engineered for you to lose. The business model isn't about finding talent. It's about collecting fees from those who try and fail. Every failed attempt is another fee for the firm, turning your ambition into their recurring revenue. The dream is the product, and the challenge fee is the price of admission, again and again. Before you buy that $500 challenge, understand, you're entering a system designed to profit from your mistakes. The odds are stacked against you from the start. The firm is not your partner, it's the house, and the house always has an edge. This video will pull back the curtain on how that edge is created. More importantly, you'll learn how to protect yourself, and maybe, just maybe, come out on top. Don't be another statistic. Know the game you're playing. Let's break it down. The real money for prop firms isn't in profit splits, it's in the upfront challenge fees. These fees range from a few hundred to over $1,000 depending on account size. Imagine a firm sells 10,000 challenges at $500 each in a month, that's $5 million in guaranteed revenue. If only 10% pass, 9,000 traders lose their fee, and the firm pockets $4.5 million for providing a demo account. The profit from successful traders is just a bonus. The real engine is a cycle of hope and failure. Most traders, after failing, blame bad luck or a single mistake and try again, paying another fee. Firms encourage this, sometimes offering discounts for reattempts. It's a loop. The firm profits from your first, second, and third failures. You're not a partner, you're a customer buying a shot at the test. The firm profits the moment you pay. Everything after, your stress, your trades, is secondary. They've monetized the dream, not the trading. Recognizing this is the first step to not becoming just another fee on their balance sheet. Prop firm challenges are psychological traps, not just trading tests. The rules, profit targets, and tight time limits force you into risky, emotional decisions. You're pressured to hit, say, an 8% profit in 30 days, pushing you to overtrade and take risks you'd never take with your own money. The ticking clock creates urgency, leading to impatience, greed, and fear. The illusion of trading a huge account encourages a gambler's mentality. Most traders end up taking big risks, hoping for a quick win, instead of sticking to discipline. The result? High failure rates, which is exactly what the business model needs. When you fail, you blame yourself, not the system. This self-blame fuels the rebuy culture. I just need more discipline next time. The firm is blameless, and you pay to try again. It's a brilliant setup: engineer failure, then sell hope for another shot. The cycle repeats, and the firm profits. Understand the psychology and you can break free. The real challenge isn't just the trading, it's surviving the rules. Two rules end most challenges: maximum drawdown and daily loss limit. For example, a $100,000 account might have a $10,000 max drawdown. Drop below $90,000 and you're out. Every small loss shrinks your buffer, forcing bigger risks to hit the same profit target. The daily loss limit, often 5%, means one bad day can end your challenge, even if your strategy would recover. These rules create a minefield. You must be aggressive enough to hit the target, but conservative enough to never breach the limits. It's an almost impossible balance. The rules aren't to protect the firm's capital, it's usually a demo account. They're there to trip you up, ensuring normal losing streaks mean instant failure. You're sprinting a marathon, but can't breathe too hard. The system is designed for you to lose and pay to try again. Know the traps before you start. Only then can you plan to survive. Here's a secret. Your trading data is valuable. When you sign up, you often give the firm rights to your trading data, buried in the fine print. If you're profitable, the firm can see every trade, entry, stop, and strategy. Some firms use trade copying software to replicate your trades on their own accounts without your knowledge. You do the work, they get the edge. Your strategy, developed over years, becomes their asset. Most traders don't realize they're giving away their intellectual property for free. The firm benefits from your edge, while you focus on passing the challenge. It's another way the relationship is stacked in the firm's favor. Protect your strategy. Know what you're signing away. Here's what shocks most traders. Even after passing, you're usually not trading real money. Most funded accounts are just another demo. No real capital at risk for the firm. You trade, And if you're profitable, the firm pays you from their pool of challenge fees. Your profit split is a business expense for them, not a share of real trading gains. Only the top 1% of the 5% who pass ever get real capital. For everyone else, it's a payout system funded by the failures of others. The firm can afford to pay thousands because they collect millions in fees. The capital is an illusion. A number on a screen. You can still get paid, but know where the money comes from. Other traders' losses. You're not a fund manager, you're a skilled demo trader being paid for performance. This model is brilliant for the firm, almost zero risk. For you, it's a game with real payouts but simulated stakes. Understand the mechanics before you celebrate your funded status. The real challenge is surviving the system, not just passing the test. Know what you're really playing for. Can you succeed? Yes, but only if you play by their rules, not yours. Ignore the time pressure. Focus on survival, not speed. Build your strategy around the drawdown and daily loss limits. Risk tiny amounts per trade. Use a strategy you've already tested extensively. Don't experiment during the challenge. Know your stats, win rate, max drawdown, volatility. If your strategy's drawdown exceeds the firm's limit, it's not suitable. Treat the challenge fee as a business expense, not a lottery ticket. Don't fall for the rebuy trap. Analyze your failures before trying again. Prove you can pass in a demo before paying again. Protect your capital above all else. Prop firm success is about discipline, not dreams. The winners aren't the fastest, they're the most consistent and risk-aware. Aim for slow, steady gains, 1% a week, not 10% a day. Ignore the hype from traders who pass in days. Most blow up just as fast. Master your psychology, know your weaknesses, set hard personal rules. For example, after 2 losses, step away, never increase size impulsively. Treat the challenge like a job application, your trading record is your resume. Focus on process, not profit targets. Forget overnight riches, embrace risk management. The few who succeed do so by being professionals, not gamblers. That's the mindset that separates the 5% from the 95%. Be the exception. Prop firms aren't evil, but they're businesses built to profit from your hope and your failure. The system is stacked, but understanding it is your edge. Choose firms with fair rules, risk tiny amounts, and treat the fee as a one-time investment. Use the challenge to build discipline, not chase a fantasy. The real prize is the trader you become, not just the account. Be smart, be skeptical, and protect your capital. If you treat prop trading seriously, it can be an opportunity, not a trap. Trade smart, not hard. Not